Welcome to the first in a series of 3 short videos about the upcoming changes to the Trustees' Annual Report being introduced by the revised SORP, SORP 2026. This revised SORP is applicable to accounting periods commencing on or after the 1st of January 2026. So if your charity has a December year end, it will be applicable for your December 2026 accounts, and for March year ends for your 2027 accounts. The revised SORP has introduced a tier system in respect of the disclosure requirements, particularly around the Trustees' Annual Report. This is a layered approach, so the requirements for Tier 1 are applicable to all charities. Tier 2 is for charities with income between £1 million and £15 million. So therefore all of the requirements for Tier 1 will be applicable, plus some additional requirements for those Tier 2 charities. And for Tier 3, which is the significantly larger charities with income over 15 million, Tier 1, Tier 2 requirements will be applicable as well as some additional requirements specifically for those Tier 3 charities. Videos 2 and 3 that we were recording will cover those additional requirements for Tier 1, for Tier 2 and for Tier 3 charities. So running through the different sections of the SORP in respect of that Trustees' Annual Report, we'll start with objectives and activities. And there are a couple of new things to point out here. To start with, as you've always done, charities must clearly state the charity's purpose and the main activities carried out to achieve them. You still need to explain those main activities undertaken to further the charity's purpose for public benefit, and explain how those activities are carried out for public benefit, confirming due regard to the Charity Commission's guidance. Now, two new areas here: volunteers and how the narrative links to the accounts. So starting with volunteers, a lot of charities rely on volunteers, and this requirement is really an opportunity to share this and be really transparent about how a charity actually operates. All charities will need to explain the input through the scale and nature of activities that are undertaken by volunteers. Terms when you're talking about and reviewing your activities, these need to be consistent with the analysis of the expenditure in the notes to the accounts. This is often not the case, and so often there is a mismatch between the narrative and the numbers, and this new disclosure requirement should help that. Under achievements and performance, there are some new requirements for all charities to include in respect of their impact reporting. And there are 2 specific questions that all charities must answer. In what way has the charity's work made a difference to the circumstances of its beneficiaries? And has the charity's work provided any wider benefits to society as a whole? Now, you can include, as the slide says, infographics, statistics and testimonials. And in fact, the SORP encourages you to do so. Financial review section. Now, some of these requirements were previously included for larger charities. So if you were over that £500,000 of income under the old SORP, some of these will be familiar to you, but I'll run through them. You need to ensure that the information aligns with the figures reported in the accounts. Secondly, the reserves balance should match the accounts, or a reconciliation must be provided, and this is a new requirement. Any material uncertainties regarding a charity's ability to continue as a going concern must also be disclosed. You need to identify and explain any material designated funds or committed amounts, including the expected timing of the related expenditure. Where you've got negative or nil reserves, you need to provide an explanation of how the charity remains a going concern. And as was included in the previous SORP, you must compare the reserves held against the charity's reserves policy and explain the actions being taken to bring the two into alignment. But what are free reserves? SORP 2026 now includes a definition of reserves in its glossary, which says they're funds freely available to spend and exclude restricted, permanent and expendable endowment funds. So what is not freely available? That's your fixed assets, that's investments held for charitable purposes, committed designated funds and any unprovided commitments that a charity may have at the year end. So you will need to think about whether or not you need a reserves reconciliation. And you'll need to explain any material adjustments, designated funds and committed expenditure as part of your reserves policy. And this table here on this slide shows the type of reconciliation that you may need to include. So it takes the unrestricted funds at the balance sheet date, which will be reported on the face of your balance sheet. Then you need to deduct designated funds. You deduct fixed assets used by the charity, investments used for charitable purposes, any designated or committed spending, and any other adjustments that you're explaining. And that will give you your free reserves figure. Plans for the future. Again, this was in the previous SORP, but it was a requirement for larger charities. But now all charities must include a summary of their future plans. And it might be helpful to include commentary here on reserves and going concern where you think this is relevant. Structure, governance and management section. So there are no changes here to the existing requirements. So I'm just going to run through what you do need to include. You must include details of your charity's governing document and how it is constituted, as well as explaining the methods used to recruit and appoint new trustees. It might just be worth noting here that you may, on occasion, withhold certain governance and management details where the criteria for exemption from disclosure are satisfied. Although we generally find that this is rare in practice. In the reference and administrative details section, again, there are no changes to the existing requirements. So you must include the charity's details, the official registered name, any other names that are used, the registration number, and if applicable, your company number too. In terms of contact details, the principal office address and a contact address if that is different. Again, for charitable companies, you need to include details of your registered address. Trustees information, so all the names of all of the trustees who served during the year need to be included, including any directors of any corporate trustees and any trustees who hold or held legal title to charity property. Again, that exemption exists from disclosure if certain criteria are satisfied, but again, we generally find that that's not that common in practice. Sustainability. There is a section for this in SORP 2026. Although it is a may for tiers 1 and 2 and only a must in terms of disclosure for tier 3. Charities in tier 1 may describe how the charity is responding to and managing matters relating to environmental, social and governance matters. And disclosure is encouraged, but it isn't a requirement. So, what should your next steps be? The first thing to say is don't panic. The process will develop and your report will evolve over time. We've been asked on a number of occasions if there's a template for the new trustees annual report, and unfortunately there isn't. Therefore, I would suggest using the revised SORP as a checklist for you as you start to think about preparing your next trustees report. Which leads me on to the next point on that slide, saying begin the planning process now. Don't wait for the next reporting cycle. Review your current trustees annual report and identify whether you're missing any information. A lot of trustees reports that I read in reality already include all of the additional requirements. It's just a question of making sure they're under the right heading or in the right order. You will need to determine whether you have all of the information, and I think this will be in the area of impact, or whether it needs to be created or collated. It would be helpful to assess whether you're currently on track, whether you're doing the right things. And you need to consider whether the approach that you take to your trustees annual report is the most effective, or whether this year it needs refining. If you'd like to discuss this further, here's my contact details, or your usual Creston-Reeves representative would be very happy to discuss this with you. Thank you very much for watching. And remember, if you're a tier 2 or tier 3 charity, there are supporting short videos for the extra requirements for those two types of charities. Thank you.